Good afternoon, everybody, and welcome to this week's edition of the Macroeconomics Analysis Session for November 13th, 2015. You're with DMAC, and sitting alongside, as always, is Jeff Saffer, head of our Elite Investors Club. Welcome to you, Jeff.
Thank you, Dave. Hello, everyone.
All right, let's get underway. Our disclaimers first. As always, the content of today's presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation or particular needs. So before making an investing decision based on the general advice presented in any of our presentations, please consider whether the advice is appropriate in light of your financial circumstances. A good disclaimer. The week in review, Jeff. Not a lot of data coming out over the course of this last week, but some surprising data, particularly in Australia. What do you make of the numbers this week?
Yeah, interesting. Look, I mentioned last week, looking ahead to the business confidence and consumer sentiment, these both had a jump last month. Mm-hmm. So not the numbers we're looking at here, but the ones before that,
yep.
On the back of the new political leadership. So it would be really interesting to see what happened this month.
Yep.
Now, the business confidence actually slipped back a little bit, but at least it is in positive territory, which is something positive, I guess. And the consumer sentiment, in theory, it looks like it's fallen, but the way they report consumer sentiment is the comparison to the previous month. So 2 months ago,
yep.
It was up 4.2, so it jumped 4.2%, which is quite a big improvement.
Yes.
And then it jumped another 3.9% this month.
Yep.
So it's cumulative, exactly like you said, on top. So consumer sentiment is now back above 100, which is the line in the sand. Above 100 means there's more optimistic people than pessimistic.
Okay.
And we've spent most of the last couple of years below 100, suggesting that there's more pessimists than optimists. So this is a rare time that we're actually flipped into positive territory. So that's a really good sign.
It is. Do you think that's anything to do with Malcolm Turnbull and taking over leadership, that people feel that things have changed, or is it?
Yeah, I think there is. I don't think there's been huge changes, I guess, in the economic landscape to convince them otherwise. The market hasn't, the stock market hasn't performed that well. The property market's holding up okay, and interest rates don't look like they're going down. So I think that's probably the main, possibly the main factor here. And in particular, if you break down the data of why and where people are confident, some of the subcategories about how people feel their outlook for the next 12 months, longer term, those categories have jumped. So I think that you could pin that on Big Mal.
Yep.
Now, probably the best piece of news this week, though, was the jobs numbers out, I think, yesterday morning.
That's right.
You can see that there was expectations that we'd have almost 15,000 jobs added. We added almost 60,000 jobs, which is a very big increase. Really importantly, most of those jobs were full-time, which means that the jobs increase is a really good sign.
Yep.
Unemployment rate fell from 6.2 to 5.9.
Yep.
I paid less attention to the unemployment rate. That usually gets skewed by how many people are looking for jobs rather than how many people can't find one.
Yep.
But certainly the monthly increase is really good. I have to say that the numbers have been a bit unreliable over the last 12 months.
I was reading about that yesterday, whether or not these articles, whether the numbers were legit or whatever the right word is,
yes.
Suspect.
Certainly the ABS came out with some really unusual numbers, probably, I'm trying to pin it down, maybe about 9 months ago. And they did actually come out and say, number one, you can't really trust our numbers right now. And number two, we've just made some changes to the way we figure out our numbers. So, look, there is a little bit of skepticism, but so I wouldn't take a single month's numbers and say, look, these are fantastic numbers. The jobs market is perfectly healthy. But if you see for months in a row that the numbers have generally beaten expectations, other signals in the industry, looking at wages, number of people that are leaving jobs to try and look for new jobs. So employees are getting more confident. So there are some signs that the jobs market is picking up a little bit.
Yeah.
So if you just look at these numbers, yep, definitely some doubt there. But if you look at the big picture, it all lines up.
Yeah, and certainly those employment numbers had a big impact on the Aussie dollar.
Aussie dollar shot up,
rallying about a cent on that news.
Yeah, and look, the Aussie dollar had really been struggling. It was down to close to 70 cents.
Yep.
Really because the US dollar continues to strengthen, and I'll talk about that in a couple of minutes. But the US dollar goes up, Aussie dollar normally goes down. But what we've actually said is the US dollar's gone up doing its own thing, and then this jobs data has actually undone all of the Aussie dollar fall and pushed the Aussie higher.
Yep. News from China?
Yeah, look, nothing major. Obviously, CPI has come out lower than expected, and not a huge news, but I guess it gives the authorities over there a little bit more scope to roll out some stimulus if that's what they're thinking.
Yep.
And industrial production, I mentioned 2 months ago, was poor, and it didn't get any attention because it was released the same time as strongish GDP figures. Now this is poor again, and again that concentrates, that things are pretty weak in China.
Yep.
And I think people reacted more to this month's.
Yep.
Core retail sales out tonight. Obviously, retail sales have really been struggling in the US for a number of months, and I'd expect that to continue. PPI as well is actually negative, and I think that's expected to be, I think, a little bit smaller negative. So, but still negative.
Yep. Okay. Well, let's go through and have a bit of a look at the markets and see what's happened over the course of the last week. Certainly, the Australian market just continues to struggle, and I was looking at a broad range of indices around the world this week, Jeff, and the Australian market has really underperformed even a lot of the European indices as well. In fact, China has outperformed from the beginning of this year to now. It's higher than where it was at the beginning of the year, whereas our market is lower than where it was at the beginning of the year. The European markets are higher.
I think the US just dipped into negative last night. It's
Yep.
been flirting sort of positive negative
That's right.
in recent weeks, but you can see on the chart that we're comfortably below where we started.
And again, we've drawn in this sort of support resistance zone through here, where prices appeared to hold up for a period of time before falling through at the end of August during what has been an extremely volatile time on global markets, only to move back up. And it looked like a couple of weeks ago that we were going to settle above this area and move upwards, but we really haven't. Since that point in time, we've moved back down. A classic 3-bar reversal here with a bullish candle followed by a very long pin bar, a bearish candle following, and prices have come off quite considerably, in the markets down today as we speak. Certainly we were trying to edge up into high risk territory, but we haven't been able to, so we still sit in very high risk, and remember right at the bottom here is extreme risk. So at this stage, let's go and compare with the US. The US obviously having this very strong move back upwards. It really just only wanted to go in one direction since the last probably 10 days of trading has come off the boil a little bit, and certainly last night a gap down, and the market kept going and really finishing very bearish right to the close of the session. We did at the beginning of last week move just into low market risk, and subsequent to that, the price action this week being fairly bearish has just actually dragged us down into moderate risk once again. So it remains to be seen what's going to happen over the course of next week, whether this old support level is going to hold, or whether we fall through that and then try and retest those previous levels. So certainly interesting times in the market at this stage. I think just quickly going back to the Aussie market, I think it's really important to think about what this means for your overall portfolio. I'm just going through and doing a little bit of research, and the top 20 stocks on the Australian market, Jeff, on average are down around about 12%. There's only 2 stocks in the top 20 that are actually been in sort of positive territory, really, and one of those is CSL, and I think the other one might have been Westfield Corporation, I think, pretty much for the year. So when you compare, a lot of the bigger stocks, making up a broad part of this index, there's no wonder that the market's been falling, Jeff.
Yeah, and those two that are up are a big part of that is actually the Aussie dollar. So they've got virtually all of their earnings offshore.
Yep.
So the Aussie dollar has gone down, and that's helped them. So without the Aussie dollar at play, you'd probably have all 20 in negative territory.
That's right, and that's the really important thing. And this is where using a stop loss and trailing stops along the way, it just makes very good sense, because there's got to be a time when you decide when to get out, and a lot of people sit on the fence and are not too sure what they should do, but certainly having a trailing stop loss that gives your positions plenty of room to move, and eventually if they do happen to get stopped out, then that's going to preserve your capital along the way should the market continue to fall. And our market really, since probably about the end of March, it's really pretty much been one-way sort of traffic. So again, the prudent use of protective stops makes a lot of sense. Let's go through and have a quick look at what we've got coming next week. The week ahead, Jeff, what are the main drivers next week for our markets?
Yeah, look, a few sort of monetary policy developments around the globe. So kicking off in Australia, we know the RBA held rates on hold, so that wasn't... It was actually a little bit of a surprise. The market was almost 50-50 that we'd see a cut. What was really interesting is, I mentioned a couple of weeks ago, a week ago, the RBA said that they had seen they're becoming more confident that the Aussie economy is basically going to improve. They didn't think that they needed to cut rates any further. So I'd like to see that idea, that thinking fleshed out, and we'll see obviously a more detailed explanation of that next week.
Yep.
Especially considering they had a quarterly update recently, and in that they actually downgraded growth and inflation expectations. So I just want to get a bit more of an idea of what's going on in the RBA's head. Yes, they don't think rates need to be cut further. They think the economy is okay. They definitely think inflation is under control very easily, and if they needed to, they could cut rates, but I just want to see a bit more thinking about that.
Yeah, do you think you probably may well mention the statistics that came out on Tuesday in terms of employment numbers, and probably just saying, look, at this stage we'd like to see that evidence continue.
Yeah, well, they have been calling for a while for the jobs market, for the unemployment rate to rise, really on the back of the mining sector slowdown, resources. We had a lot of huge projects in the mine, and small projects as well in the mining space, and that sort of investment building phase where you need tens of thousands of people to build a mine and set it up, has sort of passed. We're not really seeing any new projects being built. The big ones, the LNG projects, are sort of tailing off in terms of development, and so the RBA has been saying for a while, unemployment is going to rise, and it's actually been much more robust than expected, and the RBA has said we've been surprised by how well the jobs market is holding up. So this latest data from this week is more along that same lines, that there's not a lot of wage growth, which means there isn't a huge amount of competition and pressure for jobs, but unemployment is under control. So it'd be really interesting. I mean, probably more interesting is the meeting minutes from the US. So I mentioned earlier that the US dollar has risen. It's actually risen for the last 4 weeks in a row, and the main reason behind that is that the market is again becoming more convinced that we're going to see that elusive rate rise in the US actually happen next month. Comments from some of the Fed members in the last week have been that inflation looks under control, that the jobs market is strong, the American economy is strong. There's been quite a bit of rhetoric from the individual members, not on an official basis, but yeah, the odds have gone from something around 33% to 68% in the last 2.5 weeks that we're
Okay.
going to see a rate rise next
Yep.
month.
Yep.
And the Fed has been saying you'll see one this year. You'll see one this year, you'll see one this year, and then said, no, not now, not now, not now, not now. Obviously, December's the last chance to have it this year. So it's looking more likely.
Interesting.
So that'll be interesting to see the minutes. But right now, yeah, it's better than a 50-50 that we'll see that rate rise next month. I think the market will maybe panic a little bit if it happens, and then I think it'll settle down. They'll realise, look, we got that out of the way, and I think the Fed will be at great pains to say, look, that was one rate rise. We're going to be very, very slow and measured with further ones.
Yep.
Japan's likely to go the other way. I've been talking about for a few months in terms of increasing stimulus rather than pulling it out of the system. And obviously in the US, we've got CPI data, and that'll play on the Fed's mind as well. If inflation is very low, which it should actually rebound a little bit this month, that'll play on their mind. Can we afford to raise rates? But I think they can. And then in Europe, an interesting one, an economic survey in Germany that I like to pay attention to, where they interview analysts and investors about their outlook for the market and the economy. This is missed expectations and has slumped for the last 6 months and could move into negative territory, which is a pretty bearish indicator for the German economy.
Yeah.
And then Europe as a...
I was going to say probably very bearish for the euro as well. Yep.
Yeah.
All right, thanks for that, Jeff. Well, that wraps up this week's macroeconomics analysis session. Those of you who are in the Elite Traders Club, I will catch up with you Monday morning at 9 a.m. Eastern Standard Daylight Savings Time. Those of you who are in Melbourne, there's a couple of members who may be coming along to Trading Plan Plus on Sunday.
And then I'm running a Cracking the Company workshop on Monday as well.
In Melbourne as well. Very good. Well, have a good weekend, folks, and we'll catch up with you next week. Bye for now.
Thank you.